Bitcoin and gold slightly ticking to the upside here today as investors try to hedge election bets less than a week away from the presidential election. To discuss what sectors stand to benefit under each presidential administration, we want to bring in Eric Ditton. He is the Wealth Alliance president and managing director. Eric, it's great to have you here. So let's start with the Trump trade, because that certainly has been front and center, at least this re-excitement that we certainly have seen play out on Wall Street. I was just speaking to Matt Hogan over at Bitwise just about some of that excitement playing out within the crypto market. So let's look elsewhere. When you see the run-up that we've seen in gold and some of these other trades, does that have further to go?
I think gold, probably Bitcoin as well, have further to go because we just don't have a plan as a country to deal with this 35 trillion in debt and growing. And we're listening to both candidates, and I haven't heard any talk about any kind of reduction in spending. There is no plan. And forget about the stock market. The smart money is in the bond market. So here we had the Fed cut rates 50 basis points, and everyone said, great, here we go. And what happened? In the next month, the 10-year Treasury yield rose 50 basis points. And that's telling you that the bond market, that's the smart money, that's institutional money, is concerned. It's not buying in.
So, Eric, what is the top trade if Trump were to win next week? What's the top trade then for investors?
Well, it's not bonds.
Yeah.
I'll tell you that. But look, you've got to be pretty juiced up about the economy. Certainly domestic retailers, if we're talking about tariffs, domestic retailers look good. I think fossil fuels, traditional energy will breathe a little sigh of relief. Financials certainly look good. I think financials and utilities, honestly, stand to benefit under either candidate. And then, of course, the traditional gun stocks, prison stocks, et cetera. But definitely the more economically sensitive companies stand to benefit from things like corporate tax cuts.
You know, Eric, I'm curious to get your thoughts just on one candidate being better than the other for the stock market. We've talked to a number of strategists, and I think consensus is maybe Trump would be slightly better than Harris. Do you share that view, and why or why not?
Yeah, forgetting about political feelings. When you have a candidate that says, I want to bring down the corporate tax rate, I want to cut taxes, certainly that's music to the stock market's ears. That's just more corporate earnings. Now, there's a song called Watermelon Sugar High. And you can have that sugar high and the stock market can do great for a while. But if we're talking about another 7 trillion in debt at the end of 5 years or however long it's going to be, at some point, that's a problem. No one knows where the tipping point is. But at some point, the market is just going to say, the bond market, you've got to pay me a lot more yield to keep buying those bonds. And we just had a weak 2-year auction. So I'm not saying it's happening now. I don't think we're at the tipping point. Japan has 255% debt to GDP. We're at 125%. All I'm saying is the markets are looking and they can't see any plan to tackle this debt.
You know, Eric, there has been more and more talk about that. Yeah, it doesn't seem like, more broadly speaking, voters don't, it's nothing new there. Voters don't seem to obviously be prioritizing this. But even from a market's perspective, to some extent, some of that doomsday scenario hasn't certainly been priced in. At what point do you think it becomes a more serious issue then for Wall Street?
I don't think anyone knows the answer to that question, Shauna. We just don't know. It's not today. We're not there. But we know that we're spending more on servicing debt now than we are on defense at a time where we really need a lot of defense spending. So we're starting to crowd out investment. We're feeling that pain. It's another reason why the Fed really wants to cut rates. We'd like to bring those rates down and bring down that debt service. So I don't know that there's anyone out there that knows where the tipping point is. But, you know, we have a problem with the system. Who is going to vote for a candidate that says, listen, I'm cutting spending, you know, all those things you love, all those benefits, I'm cutting them, and I'm going to raise taxes. That candidate has no chance of winning an election. And so right now it's marketing. It's who can give the voter the most. And we'll see if that actually happens after they get elected.
Yeah, certainly, and that's why we haven't heard really either of the candidates obviously talk about that, prioritize that within some of the plans that they've put forward. Eric, real quick, before we let you go, we've talked a lot about what a Trump presidency ultimately or could potentially mean for the market. A Harris presidency, real quick, how should investors be thinking about that for their portfolio?
I think probably the best play on a Harris presidency is healthcare. Harris really wants to greatly expand Medicaid, Medicare benefits, and I think